Good afternoon, traders. Welcome to the Moy Analytics Afternoon S&P 500 and Gold podcast going into July 20th. Going to start off with the S&P 500. Okay, we've been bullish overall from 3502. We've rallied 4,130.25 into the bullish trend. There's a lot of other bullish calls I'm not going to go into in here. Then the trade, a failure below 75, 74.50 plus 62 per hour has brought in now 101.5 down into here. That was the break below this line down here. Decent trade back above this formation will warrant a decent strength. That's going to come in at 75.12. 75.12.57 minus 23 per hour starting at 6 o'clock p.m. Eastern Standard Time. Decent penetration in there is going to be 30.75 up until Monday's open. A decent failure below 74.40, 14 plus 19 per hour starting at 6 o'clock p.m. We'll project this downward 200 minimum, 400 plus maximum. If we break below there decently and back up through it decently, look for a decent short covering to come in. It would be preferable to see at least a 15-point bounce off of that line prior to breaking below for added form. A maintained gap higher tomorrow with even minor bullish reversal below and likely bring in a run for the highs. In the gold, overall we've been bullish since August 16, 2018 from 1183. We've seen 4,443.1 to the upside. A lot of other bullish calls in here. Then we held exhaustion above at 56.2680 and rolled over 1,671.4. A number of other medium time frame calls I won't get into. Then the trade below, we held exhaustion above at 41.7950 to 42.3240 with a 42.1550 high and rolled over 241.1. Trade below 409.22. So 40.9220. So projects us downward 40 minimum, 165 plus maximum. And we detained 118.8 going into Friday. And then more recently on these lower time frame calls, I said we may be in the lower time frame, the last stretch of the move down from 42.1550 with possible exhaustion at 39.7340 to 39.5740. We're holding this currently with a 40.1220 low. Excuse me, we're holding this right now with a 39.63 low. And it bounced up to 40.2890. Bear with me just a second. Decent trade back above this formation right here is going to warrant a decent strength. That's going to come in at 40.20.30 plus 2 per hour starting at 6 o'clock p.m. Sunday. That would be, in my opinion, an ideal long above that. Not because it's a major formation, but just where it's situated after holding major exhaustion levels down below. We'd held this on the continuation charts. We'd held this main area here, bounced significantly, rolled all the way back over to hold it again, just a little bit above this low. Then in the current contract, also holding this exhaustion level here, like I said, and bouncing. So taking out this line could set this up for a decent, would be an ideal place to get long, and then that would set you up to be long to break above these other lines above. Outside of that, we're still bearish. Okay, thank you for watching, and I'll see you in the next podcast.